Bismillah ar-Rahman ar-Rahim. Today's agenda, if we can get the lights, please. I will be happy to tell you a little bit about American Finance House LARIBA. I'll tell you a little bit about our company, our background, our products and services, the key concepts that we use in delivering these products and services. I will go through an example of our automobile financing and then correlate it to our home financing product. And inshallah, we'll give a conclusion. American Finance House LARIBA is one of the oldest community-owned companies in the U.S. providing this type of financing. And I do underline community-owned. No affiliation to international investors, institutional or otherwise. We were established in 1987 by a group of community members who truly believed in making a difference to the existing RIBA financing programs. I wanted to provide an alternative that will make their children, their grandchildren prosper in a RIBA-free environment. We offer both types of financing. We are a licensed finance company, so we provide financing both on the consumer side and on the business or the commercial side. Our motto is, credit is a basic human right. What do we mean by that? It's a right like you have a right to breathe, to eat, to drink. You need to be able to finance your activities. So what we do, American Finance House, allows or facilitates members of the community to participate productively in the American dream. And that American dream is being able to buy a home, finance a business, buy a car, things of that sort. Our mission, quite simply, is to remove RIBA from people's lives. We do that by offering financing and investment services, and we serve and we endeavor to serve the individual's needs without regard to their social status, gender, race, religion, etc., without prejudice. Our goals are, number one, of course, to comply with the Islamic Sharia jurisprudence, as well as the rules and regulations of the United States. The two go hand in hand. Our second goal is community reinvestment. We facilitate the ability for our investors to put their money and have it utilized within the community that they live in. As well as job creation. We need to create the environment for our brothers and sisters to work in this type of field without persecutions, particularly for the sisters, hijab, issues of prayers, things like that. So we'd like to create that environment for them to be comfortable. We're located in Pasadena, California. In fact, just a block and a half from here. But we are very active on the internet and very accessible. We're sort of the .com company, LARIBA.com. We're currently registered to operate in 13 states throughout the United States. And we're expanding, inshallah. Our goal is to blanket the whole United States. The consumer services that we provide, I mentioned consumer and business. The consumer services we provide include homes, automobiles, and household equipment. And on the business side, we provide equipment financing, materials and trade finance, as well as business expansion. I must stress, though, that we are not a venture capital firm. We are not an investment company, so we cannot hold equities or things of that sort. We're very conservative. We're entrusted with the monies of our investors, and we care to make sure that we safeguard it to the best possible. We also provide an investment opportunity in order for, we cannot offer these investment finance, the various projects without having the cash flow. So we offer the opportunity for qualified investors and institutions to earn a reasonable rate of return without RIBA, while contributing to community development. The focus is always on community development. Our approach, and this touches on a question that was raised to me a couple of times today, what is Islamic financing? My humble answer to that, it's providing socially responsible financing, which is financing a socially responsible activity, providing financing an asset or a service, so it's asset-based, as well as tying the rate of return to the economic value, marking the market, the rate that you earn to the economic value of the asset that you're financing. We never start from a predetermined interest rate. If we look at our auto financing model a little bit, the background and the environment that we all see, there are strict laws and regulations covering the legal documentation and disclosures the bankers in the audience and anybody who's ever been exposed to it, there's Regulation Z's, truth in lending, things of that sort, intended to protect the consumer. That's fine. We embrace that and we endeavor to comply with it. With respect to auto financing specifically, if you want to take a loan, you'll find that by going to your local dealer, the auto financing rates we all see in the newspapers are heavily subsidized. 1%, 2%, 3%. The banks are competing to offer that. But our community members who cannot partake in loans with RIBA are being excluded from that. They're forced to go to leases. When we've done our analysis of leases, we found that leases are more costly. As a matter of fact, the dealers nowadays are steering people towards leases as well because it generates a higher rate of return for them. So our financing model is a purchase financing based on a lease-to-purchase concept. We allow you to use the concept of a lease to be able to own that vehicle for a very comparable cost. The mechanics of our financing model: we purchase the automobile jointly with the client, we lease our share to the client, and at the same time the client agrees to repurchase our share in the future. And given this agreement, we authorize the client to register the automobile in his or her name from the start, and we take a lien to protect our interest on it. How do we calculate the payment? Our payment calculation is based on two components. As we said, it's a lease to purchase. The first thing is the lease side of it. What is the lease value that's determined for this vehicle? And the client, since he did not pay the full price of the vehicle, if we're financing 80% of it, let us say, he has to pay us rent or lease based on our share. That return on capital that we've invested in that vehicle is called return on capital, and we call it RONCE. In addition to that, the client wants to purchase the car. He does not want to keep renting from us forever, so he repurchases our share. So in addition to paying a rent, he makes an installment on top of that to be able to purchase the car from us over the period of financing. The repurchase is called Repayment of Capital, or ROFC. And we have a proprietary computer program that we developed that will calculate a level payment for you, similar to what the bank offers. So you get a flat payment, $500 a month or $300 or $400, and it stays the same for the whole term of the financing, and it would cover those two components that we have. And I'll show you a little more. How do we calculate return on capital? As I mentioned, we never start from an interest rate. The return on capital is based on the lease or rental value of that automobile. We ask the client to go check with their local dealers, check with long-term rental agencies that are available. See how much a vehicle like the one he's looking for would rent for or would lease for the term that he wants to finance it. We do the same from our side. The two of us come together and discuss it and agree on what works, what's a fair rate of return. So, for example, if we're financing 80% of a vehicle, and we establish that the rental rate, say $200, the client would start out paying us 80% of that $200 or $160. That would be the lease component or the return on capital component. How then do we calculate the repayment of capital? That's the share that we've put in. Obviously, the amount that needs to be paid back is a function of how long the client wants to take to pay us back. The key that we mentioned is that we do not add on anything to the capital that we put in. If we've put in $10,000 in a vehicle, we get back $10,000, whether it's being financed over 2 years, 3 years, 4 years, or 5 years. How much is to be paid back? That we have a computer program that calculates that based on the term, of course, and the rental value. And I mentioned we can go up to 5 years on automobiles. For documentation, in order to comply with the U.S. laws and regulations concerning disclosure, truth in lending, things of that sort, we After we calculate the payment through our computer program, that level payment that I alluded to, we put it in a traditional amortization schedule to calculate the implied interest rate or the implied rate of return of that flow of payments, the $500 a month for 36 months. That rate of return we are required to disclose to the client. We have no problem. We disclose that to the client. And we prepare a note, a promissory note, and a lease to purchase agreement that is a proprietary agreement also delivered by the LARIBA. What are the benefits of our program? The client pays a rate of return based on marking the rate of return to the market, not a predetermined interest rate. And this helps in the sense that if you're buying a Toyota Camry, that rental rate is going to be different than if you're buying a Lexus 400. It's a fair and a reasonable way of doing it. It's not a flat 7% rate that a bank would charge or something of that sort. The additional benefit we have, because it is purchase financing, the client avoids the limitations of the traditional lease that a dealer would put on. There are no mileage restrictions. There are no certain maintenance schedules that are required to be done on specific shops or payments of that sort. And the residual payment, there are no residual payments. Our contracts are fully amortizing. So if you take a 4-year contract, at the end of the 4 years, you own the car. You don't have to worry about a balloon or a residual payment in the terms of those dealers. If we look at a numerical example, just to sort of hammer these issues in, let us take an assumption. We're looking at a vehicle that will cost $25,000. The client would like to put 20% down, which is $5,000. We're going to be looking to finance this over 4 years. And let us say the rental value that we both agree on, based on the checking of the client and our checking, is $200 a month. What then do we do with this information? We put this in our computer program, and it generates an amortization schedule like this. We're starting out with $20,000 that was financed. Our share is 80%. The client put down 20%. We finance 80%. We're financing over a period of 48 months. So the computer program will solve for a level payment, which you see here, $503. So for 48 months, you will pay $503. What's included in the $503? That includes the RONC portion. If you remember what RONC was, return on capital. RONC is, our share is 80%. We agreed that the rental rate is $200. So the first month he pays us 80% of $200 or $160. 80% of $200. If the total payment is $503, the difference will have to go to purchase back our share, or it's ROFC, repayment of capital. And you'll see because he's paid $343 in that month from our share, our balance will go down to the $19,657. The program solves the very next month. The rent that he's paying, the rental portion, is no more $160. Our share has declined, so it goes down to $157. And that share is basically the $19,000. It's calculated as the $19,657, which is remaining outstanding of our share compared to the original price that we purchased. It goes down all the way. You'll see the return on our capital, the rental that we earn, declines as we reach the 48th month. And of course, the payment stays the same. The balance that's outstanding will reach zero at the end of the 48 months. Incidentally, at any time during the contract, if the client were to come in and say, I wish I have some additional capital, I wish to buy your share fully at that time, no problem. We look on the schedule and see let's say you're in month 4, you want to pay off. The balance is $18,610. This is all you have to pay. There are no future rentals, no additional payments, etc. So this is our auto financing program. Our home financing program, I'm not going to go through the whole thing, but it works in an identical manner to the, thank you. Now the shoe's on the other foot. Huh? The home financing model works exactly the same way as the automobile. It is based on a fair rental value. This time, instead of an automobile, instead of the Camry or the Lexus, of the home. So we check the rent in the various neighborhoods that the client is looking to buy. The client does the same thing. We check real estate agents. We check with on the internet, etc. and we agree on a rate, a rental value, and we can finance up to 30 years with the help of our friends at Freddie Mac, as well as the down payment that we require can be as low as 5% now. Of course, if you have less than 20%, the industry convention is you have to purchase PMI, or private mortgage insurance. In conclusion, I'm not going to take the whole 5 minutes. In conclusion, American Finance House is a community-owned finance company. We are not a bank, and we're not an investment company. There are differences. We don't want to run afoul of the requirements for either. We are a finance company. We provide socially responsible, asset-based financing that is based, the rate of return of which is based on the economic or the rental value, the marking-to-market value of the asset that we're trying to achieve. And in our belief, this is the essence of Islamic financing. And of course, we have to strive and make sure that our dealings comply with the Islamic Sharia and the rules and regulations of the United States at all times. We have a website, www.lariba.com. All our services are mentioned on there. You can also apply directly online. And I will defer to the next speakers. Thank you very much, Mr. Chairman. Thank you.